Hey guys, and welcome back to my channel. My name is George, and today I'm going to be talking about how anyone can get started in the stock market. So it's very simple. If you guys are familiar with Robinhood or Webull, I highly recommend those two. E-Trade is also a good investment platform to get started. I mean, it's very simple. Just log in, create a username, password. If you're under 18, get your parents to help you with it. But I think it's a great way to get started. If you're under 18, I highly recommend going to Vanguard to get you started with a simple investment account. Vanguard, I believe, is one of the best that are out there. But the thing about the stock market and getting started in the stock market, I believe, is it's a mental thing. It's a lot of people are afraid to get started. They don't know how to get started, and they overthink it, and they think they have to be these gurus and these geniuses or what have you to just get started, and that's further from the truth. I started about 15 years ago when E-Trade first came out, and allowed people like average Joes like me and you and whomever to start trading on the internet, and that was kind of like a new thing back then. And so I started with like $100, just put it in there and just like, okay, let's see how this works. I remember being very nervous. I remember thinking like, oh my gosh, I'm gonna lose everything. Everything was uncertain. There was a lot of movies out, like The Boiler Room back then, that really made people nervous about the stock market. And it was like right during the whole the boom of 2000s of the tech companies. So everyone was scared of the stock market. It caused a market correction or a market crash back in the 2000s, and so people were very leery. I was, but I was like, you know what? This is the best time, in my opinion, at that time was to get in, right? To get in the bottom. Of course, now I know that is speculative trading, and I've learned not to time the market or try to get in and out in the high and the lows, because you're not going to know. Everyone knows after the fact. You look back and you can see, okay, if I would have gotten in here, I would have sold here, then I would have made this much. But reality is you don't know. You know, we can't. We're not fortune tellers, and so no one can really predict the market. There's gurus out there that try to. We can speculate at best, but that's not the best way to invest, in my opinion. But yeah, when you get started, start with like $50 or $100. Find a solid company. This is important. It's to find a solid company that you would invest in for the rest of your life. I'm not saying that you will, but I'm saying if you have that mentality of like, I'm investing in that company. Warren Buffett puts it the best way. It's make it as though you're buying the entire company. Would you buy the entire company? Do you like the company? Do you know about the company? Do you use their products? Do you believe the future of their products or their services are going to continue to grow over time? That's just the basics, right? Especially if you're getting started. To me, that's foundation. That's key. Would you, if you had millions of dollars, buy that company? And that will help you invest in certain companies. I highly don't recommend investing in penny stocks or stocks just because of their price. You don't know anything about the company, pharmaceutical company, a tech company that you don't know about. And what happened to me when I first started, I actually did that. I invested in, I looked for penny stocks. When I was Googling back then, 15 plus years ago, I was Googling for penny stocks because, that's what I knew, or that's what I've heard. You can make a lot of money. So I did that, and I remember investing. My first investment was in a company that was supposed to turn corn into fuel and into ethanol, and they were going to use corn to do that. And there was a startup company that came out, and there was all this buzz around it, and it was like 10 cents a share. And so I was thinking, okay, if I about 100 shares of this, if it blows up to $100 a share, have thousands of dollars, in a matter of months, if not a couple of years. And so because of the mentality of like, okay, you know, I didn't know anything about the company. The company was small. It was during that time there was a lot of these companies coming out. They were being subsidized by the government, and so this company busted within the first year. It was pumped and then was dumped, and then I lost my entire investment. Back then, I think it started with $100, and I kept investing in that company up to, I believe, $1,000 that I lost because it just eventually got delisted, and that was all my money. So I don't recommend speculative trading or investing in companies or stocks that you don't know anything about. Do your due diligence, do a lot of research. I've been doing this over 15 years and I still do my due diligence. I still do a lot of research on the company, in the industry. I mean, I'm a nerd when it comes to all that. I got my degree in finance and I work in corporate finance and accounting. So that's part of what I do and it's part of me. So I use that to my benefit. But if you're just getting started, you don't have to be a finance guru. You don't have to, have a degree in finance. You don't have to be an accountant. You don't have to, be a nerd when it comes to balance sheets and stuff like that. But for sure, invest in companies, not in stocks, but in companies that you believe in and you think they're going to do well over time. But before you even get started in individual stocks, I highly recommend, and this is what about 95% of my entire portfolio is in S&P 500 index funds and mutual funds, which are very diversified funds that basically give you a large piece of the pie. It gives you the entire market essentially. One that I highly recommend is going through Vanguard and doing a ETF. An ETF is basically, in layman's terms, it's just a single stock that within that stock is divided into 500 largest companies in the country. So essentially buying the market. It's a snapshot of the market, but you're essentially buying the market because those are the main companies that drive the stock market. Go into Vanguard. And the reason why I say Vanguard, because you can get S&P 500 index funds, ETFs, whether it's E-Trade, Fidelity, Robinhood. You can use all these apps to get you S&P 500 index funds. But Vanguard is known to have the smallest expense ratio when it comes to managing an ETF or another fund. I mean, they're very, very low expense ratios. Expense ratio is basically just what they charge you on an annual basis, I believe sometimes quarterly, but what they charge you to manage your fund or your ETF. I'm probably getting really technical right now, and I'm probably lost you, and you're like, okay, I don't get what that means. But yeah, do your research, S&P 500 index fund, ETF. There's several out there. Pick one. Again, like I said, I recommend Vanguard. Going to Vanguard, looking at their S&P 500 index funds, picking one with a low expense ratio. A strategy that I use that has worked really well for me is doing direct deposit. If you have a job somewhere, just have a portion of your paycheck go straight into your Vanguard account, your E-Trade account, your Robinhood account, whatever the trading app that you're using, and have it directly deposit in there, $10. I still do that. I still have $10 automatic transfers going into it on top of my bi-weekly automatic transfers going into my investment accounts. I'll also do on top of that smaller ones. I don't know, I'm just weird. I think mentally it's it's like, well, I would spend $10 buying Starbucks, which I don't regularly. I think I buy Starbucks like a handful of times a year, but in my head I'm like, well, I'm spending $10 a week on something. In my head, it's like, to me, that's an expense that's going towards an investment at some point. So, but yeah, automatic transfers into that into your account, your investment account, then you can, grow in, your investment or your savings until it's like $337 and you buy your first share. And that's how you get started. Simple as that. And you do that over and over and over and over again. And you just slowly, you'll see your investment portfolio increase over time. That's all I have. Hopefully you found this informative. Hope to do more videos like this. So if you enjoyed this, it encourages me to continue to do this. Just give it a like. Give me a like, smash the like button, and subscribe. Think about subscribing. So that's all I have for you guys. See you next time.